three things which I try to think about with in regards to trading the ladder and in kind of a more broader term. Just three things I like to use with the profiles to kind of give me an expectation for what the market is potentially capable of, and also being potentially wary of when I feel the market isn't as kind of ripe to do a certain type of move or any kind of thing. So yeah, so basically the three kind of things which I kind of look at before I'll even start to consider trading is, or when I'm thinking of ideas and coming up with areas in which I want to trade in, I kind of have three things I use. So I use the profiles to kind of gain an expectation for the auction. So basically before I even put a trade on, or I'm thinking of any type of, it's very clear as to where the market may want to go or these kind of things. I'm basically got an idea in my head, okay, right, what kind of price action is potentially going to be coming my way, or how am I going to have to kind of navigate around it? Am I going to change my execution accordingly because it might be trading a certain way? The second thing is then watching the ladder, right? So when I'm actually, the trade's now in play, it's trading the area or whatever it may be, I'm now watching the ladder to actually see if I'm getting confirmation of what I was thinking might happen. So for example, in certain types of areas, I'm expecting this type of price action, and in others, I'm expecting other kinds of things. So this is kind of what I look at. So I'm trying to gain confirmation from the ladder as we're trading in the market. And then the third thing is for actual shifts in the book, right? So for example, when the market is, so shifts in the book to kind of gauge when there may be opportunity, right? So in a lot of these situations, there's not necessarily opportunity, but what there is you're kind of maybe laying off the way in which you want to trade. So i.e. whether that may be you're applying less risk, you're executing slightly different, you're being more passive as opposed to kind of looking to a momentum trade, all these different types of things. So those three things are really important for me. And basically what I'm going to do is I'm going to briefly show you two examples of this week where this was really, really key factor for me, and they're quite broad. And the first example is quite broad, and it's like a multi-day accumulation of price action where I'm kind of gauging as to what the market was telling me and what it was doing over time. And then the second example is actually from this morning, which was it was a more kind of short-term example, but what it was quite clear as to when the market kind of shifted to give you an opportunity. If you were kind of clear as to the first opportunity not being as easy as it was kind of expected. But like I say, I'll kind of go over this now. So basically what I'll do is I'll start with Tuesday in the Bund. So this is basically I'll start with the 60 minutes. So I'll start with, okay, so basically, what I was kind of focusing on was this big large sideways range we had from the Bund. This was kind of what I defined as this, like the post-Sintra range that we had. And obviously we kind of continued to grind up. We eventually broke out of this range, and then we kind of continued to grind up in this fashion. It was quite overbought. It was quite, very grindy. Momentum trading in this area is really tricky. But then what we did get, we got a very large rejection kind of candle on a daily. It was very large rejection. But what it was, this was like a massive liquidation candle in the sense of in type of an overstretched market, which kind of, the ease of this move was the essence of this was very kind of liquidation, fast money, aggressive move. And then basically what I'll do is now from here, I was very kind of, basically this whole area I felt was very vulnerable to any kind of, if we were to ever revisit the area. And this is kind of what we saw on Wednesday, but I was never really interested too much in selling, trying to play within this Friday candle for this play. I was quite focused on an area, and this is where the profiles for me come into play and what I was expecting. So initially, it was easier for me because I wasn't necessarily too interested in trying to trade this inside day break on the Tuesday. But basically, the kind of broader outlook for me was, whilst we were trading in this range, I wasn't too worried about, in Friday's range, I wasn't really too worried. I was kind of interested in the extremes of Friday's range and a bit lower down towards 76s. But the whole hold-up of then here was very significant as to the actual, the whole auction of the day was really kind of heavy, low volume, It was in terms of the actual traded, the actual clip sizes and throughout the day were really quite high, but at each price, the actual trading and volume, total volume was quite low. So for me, this was everything was kind of confirming this, we were potentially holding up. I knew that, for example, because we were trading on such a big sideways range again, if I can scroll across so we can see, this range was, I think it was a multi-week range. And this was also well traded that it was going to take time initially for the market to sit on top of the range if it was ever going to liquidate through. So already in the back of my mind, this was always preparing for a kind of liquidation type move. And the area which I was looking at was the 76s. If I can I split these?
Toggle right click, yeah.
Yeah.
And then toggle bottom.
Oh yeah, cheers.
Yeah.
Shall I just do toggle at this toggle splits this profile? Okay, cheers mate. So basically I was focusing on these 76s here, and this was the breakout we had. This was on some dovish ECB speak. But I found this area was really significant because it kind of it tied in for me the positioning of which we may break down. So we had the print come on top of the day's VPOC, sitting on top of this really well. Obviously this whole massive range was incredibly well traded, but we were sitting on top of this point where you had this balance we broke away from, and we were set up here. And then we had the whole day on Tuesday spent within Friday's candles. So we had Friday's big liquidation, Monday, Tuesday, both really heavy hold up type days in terms of like the volume and the way the price action was trading. It was really, really, really lethargic, really slow, and it wasn't really breaking any areas where I was quite convicted on us trading. But this is kind of where the three things I look at start to come in. So on Wednesday when we came in, obviously we had a big gap, relatively big gap below both ranges. So some people kind of, I initially was kind of, okay, I need to really kind of be careful now as to where I'm trading, how I want to execute. I was still really like the 76s, but I was kind of, these day types can tend to get sucked back. This could have easily spent another day here. It could have perhaps, failed below here, but all these things I was thinking of. So the first thing I noticed when the book opened on the Wednesday was just kind of how loose and kind of fluid the book was. It was a very small range, if you remember. If I bring up the 5 minute, if we can go back to, the range was very small, but within this range, so this was the range we had here. The range was really, it was very loose, and kind of the rotations within the range were really wide and easy. It was very easy for the market to kind of trade from side to side. And also, especially in terms of the most recent future sessions. So if you've been watching the future sessions before, instantly, this was something different. So I knew the 76s was kind of the point at which I really wanted to trade through. But the fact that the book was showing me these different things, it meant that I was quite switched on to trading through the 76s, even when I thought, okay, this could potentially kind of rotate and fill out. I was very switched on, just even if it was, the idea became kind of more something I wanted to trade. So obviously we had a good French industrial figures number, but the whole concept I wanted to get out of this was, for me, the first thing that I kind of realized was, okay, the book's different this morning. And it was just, even though we'd gapped out of range, even though we had all these things where we you may maybe see a kind of more balance, mean reverting kind of initial balance or initial couple hours of trade, everything was kind of telling me this is different in terms of the way we're trading now. So, obviously we had a very big liquidation candle, and this all came from the fact that I was quite well prepped in the sense that if we kind of got a shift in the book, if we got a shift in the way that we were trading through these areas, then we were likely to see a liquidation regardless of the time, regardless of the hour. So that was kind of my biggest takeaway from the Wednesday trade, and this has all come from days of which you're kind of beaten down and you're tired out from trading these type of price action days. It's very kind of, if you're just trading this market individually, it's really hard to kind of get, and you haven't got that kind of broader focus, you can get really trapped in that kind of short-term mindset. So yeah, that was kind of the first thing, was the book, and then obviously the way that we kind of traded through that was really quite an aggressive liquidation move. Simon spoke about it a few weeks ago about those type of liquidation moves. So like once we traded through the 76s, if you could watch it, it literally wouldn't uptick again, and it was just the nature of those liquidation moves is once you're on side, it should just you should never really go a tick off side, and that's kind of what we got, all the positioning that we kind of been sat on, but that we had been sat above. And everyone that was long in here and every other position that was captured in here, they had to make a decision at that point. So that was kind of the really fast liquidation move we got. And that was the sense of, it was really hard to hit anything lower than 76s because of the nature of the liquidity, hitting bids and then stacking offers. So it was really hard for you if you weren't kind of prepped and you weren't aware of that potential for that move to either, you may have taken a few ticks, maybe say 3 or 4, and you weren't really aware as to there was like, it went about 20, 30 ticks, I think. So it was a really, really kind of opportunist move, I'd say. And it was also over, it took 2 days really to kind of come into play. So that was the first example. And then the second example, kind of more short time frame, but it was from today in the Bund. So,